Irish economy grows 3.2% as multinationals export to the US. Exciting news for the Irish economy. In the first quarter of the year, it experienced a remarkable growth of over 3%, driven by multinationals eager to stockpile their products in the US before impending tariffs take effect. According to a preliminary estimate from the Central Statistics Office, CSO, the economy, measured by gross domestic product, GDP, expanded by an impressive 3.2% during January, February, and March compared to the previous quarter. This surge was primarily fueled by the sectors dominated by multinational companies, while the domestic economy saw a more modest increase. The latest trade figures reveal a staggering rise in exports to the US, which jumped by €8.7 billion, a whopping 210.5% increase in February alone. This surge reflects the urgency of exporting firms in Ireland racing against the clock to get their products across the ocean before the tariff deadline. Starting April 5, goods imported into the US from all countries are now subject to a 10% tariff. Meanwhile, US President Donald Trump has temporarily halted a potential 20% tariff on all EU imports, adding a layer of uncertainty to the economic landscape. However, this protectionist shift from Washington has cast a shadow over the economic outlook. Just last week, the International Monetary Fund, IMF, downgraded its growth forecasts for the global economy, the US, and the Eurozone, citing the repercussions of tariffs and the ongoing trade war with China. In a separate development, US consumer confidence took a hit in April, plummeting to its lowest level in nearly 5 years. This decline reflects growing concerns about the economy and labor market, largely attributed to the impact of tariffs. The Conference Board's Consumer Confidence Index fell by 8 points to 86, marking the weakest reading since May 2020. This decline represents the fifth consecutive monthly drop, the longest streak since 2008, and it fell short of economists' expectations, which had predicted a reading of 88. Moreover, consumer expectations for the next 6 months have dropped to their lowest point since 2011, while current conditions have also seen a decline. These findings align with the University of Michigan survey, highlighting a rising apprehension among consumers that increased duties on foreign goods could harm the economy and job market, while also driving prices higher. Stay tuned for more updates as we navigate these economic changes.